Good morning, everyone. Well, not much activity yesterday as the market waits to hear what the new Fed Chair, Janet Yellen, has to say today in her first presentation of the Fed's semi-annual report to Congress on monetary policy and the outlook for the U.S. economy. When her predecessor, Mr. Bernanke, first discussed tapering down the monthly bond purchases, he said that they could pause if necessary, but now that would seem to be a major disruption and a serious step. So the market's waiting to hear if Yellen says anything today about the possibility of pausing the tapering. I expect, however, that since it's her first appearance as Fed Chair, she'll want to give an upbeat, optimistic presentation and therefore will emphasize the likelihood of decent growth in the U.S., not the possibility of disappointment. That should boost the dollar again, in my view. Other than that, there was little news out to move the market, and activity largely consisted of unwinding last week's trades. Some risk aversion sent the dollar higher against most EM currencies, but stocks managed to close up slightly in any event, showing that investors aren't entirely risk averse. U.S. T-bill yields declined a bit as House Republicans met to discuss the debt limit, leading to hopes that it would be extended this time without a lot of fuss. That would be a relief and could help the dollar to gain further. Elsewhere, the dollar was lower against all of the G10 currencies except for the Canadian dollar. Dollar CAD moved higher after housing starts missed expectations, and Bank of Canada Deputy Governor Murray said that a weaker Canadian dollar will lead to broader economic growth. This comment was basically a green light for investors to sell the currency. The Norwegian krone, on the other hand, remained the best performing currency after yesterday's higher than expected CPI figure. The second best performing currency was the Australian dollar, which gained after home prices rose and business sentiment in Australia improved. I'm still not convinced that Aussie dollar has turned. As for today's indicators, there's really nothing that important. The U.S. job openings and labor turnover survey, or the JOLTS report, is forecast to show little change in the number of job openings in December, while the NFIB Small Business Optimism Survey is forecast to be unchanged in January from December. So neither of those reports is likely to do much to the market against the background of Yellen's speech. By the way, the JOLTS report says that there are around 4 million job openings in the U.S. The number of unemployed people in the U.S. is over 10 million. So even if every job in the U.S. were filled and there was not one single job opening, there would still be 6 million unemployed people. Please remember that next time you hear about how the Republican Party wants to cut unemployment benefits in order to encourage unemployed people to get out and look for a job. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.